Hey guys, Hans from Crush the Premium here. I wanted to show you guys a really cool trade that we did yesterday. It's up quite a bit of money today. We haven't closed it yet, so we'll talk a little bit about the decisions that go into that in a moment. Yesterday was Fed Day, FOMC. Chairman Powell came out, dropped interest rates by 50 basis points, which was about double what really most people were expecting, although futures were expecting about 50-50 chance of 25 or 50, but the market was pleasantly surprised. I think they saw it as Powell being somebody who wanted to get ahead of the curve, which is a bit unusual for the Fed. Typically, they sort of take what's in front of them and base their decisions on that. And really, the economy is looking really good. Unemployment is generally fine, and so interesting that he would say basically that he's almost a kind of a Fed put, saying, look, we're not worried about inflation anymore. And in fact, that's a secondary decision to us. We are going to now focus on the economy, on employment, and we're going to do everything in our power to make sure that full employment is there. And so that really lit a fire under everything today, and as well as Bitcoin. We'll talk a bit about some of the decisions that I made in entering this decision yesterday before the news came out. And today's pop, of course, a big bonus from the Fed to kind of get that trade really started very powerfully, and hopefully it continues. So let's talk a little bit about the setup. So we'll talk about the chart of MicroStrategy, which is the stock we're talking about today. We'll look at Bitcoin. We're going to look at a little bit of a chart on money printing. We're going to talk about skew and implied volatility, because those things are very important when putting on a back spread. You have to make sure that the implied volatility is really quite low, because you do have some vague exposure, right? So you want volatility to be low. You want skew to be relatively flat to the upside, because as we're going to look at in a moment, you're short a nearer term call or an out of the money call, two out of the money calls. And so you need that upside skew to be rather favorable. Meaning at least flat, at least for the product that you're looking at. So we're going to look at that. We're going to look at that skew, and we're going to talk about how we came to that setup, and hope you guys like it. Hold on one sec. Quickly, just wanted to mention my disclaimer here. All materials presented today are 100% for educational, for entertainment purposes, if you like. Do not do any of these things. This is a complex trade. Options will always run you the risk of losing all of your money and maybe even more. So you definitely want to be a seasoned investor to trade options, generally speaking, apart from some of the more simple covered calls, which are one of my favorites. I ran hundreds of millions of dollars in funds like that. But when you start to get into the more complex strategies, you definitely want to practice these in a paper account first, see how they work out, and build up your confidence over many months. So let's move on here. Okay, so let's look at a chart of Bitcoin. So part of the thesis was that, look, gold's had a really good run. Bitcoin has not really been talked about for a long time. It hasn't been acting that great. It's been sort of bouncing around between, say, the low 60,000s down to sort of the mid 50,000s. Ever since the ETFs were listed, it hasn't been acting really the way that we've seen Bitcoin act previous to that in the previous year or two. So we've sort of been going relatively sideways for quite a while, and people haven't been talking about it. And I like that. When I'm looking for an opportunity, I like it when people are not yet really talking about it. We know that it's a very hot thing. Both administrations, whoever gets into the presidency, they're both generally friendly. They're warming to Bitcoin. We won't get into the pure details of that, but both administrations are going to be fairly warm to Bitcoin, and they're going to spend. And this is part of the problem in this new world. It's just the constant money printing, the constant spending, and of course, Bitcoin is known as digital gold. So let's look at the chart here. We've got Bitcoin. Disregard today's move up. Yesterday, we were stuck in this sort of pattern here, and I was thinking with the Fed potentially coming out and saying 25 or 50 basis point cut, that's going to probably light a fire under risk assets. I've been saying that for a couple months. Things just look fine. and it's going to be a kind of a roaring 20s type scenario. They're going to be printing money. All kinds of companies are going to be doing well. Interest rates are coming down. Small, medium businesses are going to finally do well with interest rates coming down. They're a driver of massive amounts of employment in the country. There's just a lot of stuff going on in a positive way. Now, are they going to be printing too much money and running up the debt? Yes, that is something that is going to be a problem at some point, but not yet, because they're keeping the punch bowl spiked, and they're going to keep the party going. And that's what they've been doing for 15 years, and that's what they'll continue to do. So for now, it looked like a very interesting thing. We can see that the MACD crossed down here when we came down to that last time that we sort of touched 54,000, and we've been rallying back, and we were really primed. Bitcoin volatility not too high, and the volatility of Bitcoin actually very, very low. So these are some of the things that I like to see really show me that there's been a lack of interest in an area. So once it starts to move and make a move, there's one way to go. People are going to get back on board, back on that train, and that can serve as fuel to the fire. It's kind of like, grabbing a stock that has very low analyst coverage, and suddenly it starts acting really well. That the analysts are going to be lemmings, right? They're going to come in one after the other and start covering and raising their targets and saying great things about it. So you're going to have this positive news flow. And I thought, well, that could very well happen to Bitcoin. Now, the miners and the related stocks have not been doing very well versus Bitcoin. And we'll talk about that in a moment. Now, another important piece. Bitcoin tends to do better when money supply is expanding. And this is a chart of M2 money supply. And you can see that in the years where where money supply sort of went sideways, Bitcoin didn't do as well. We remember that 2018, 19 was a bit of a sort of cryptocurrency winter, Bitcoin winter. And then of course we had 2020, we had COVID come along, and suddenly Bitcoin took off, money supply took off. We've had a little bit of a similar consolidation lately, and lo and behold, look what's happening. We have M2 money supply starting to expand again. And I don't think anyone's too surprised. This is a world that has become accustomed to being awash in cash, credit. Interest rates are coming down. There's no reason to believe that they're going to be getting debt under control anytime soon. We are going to be in a similar situation to where we've been for years, which is more money, and of course that's what's going to be probably driving all kinds of risk assets, stocks, etc. Potentially real estate as well, because you want to own things that have some pricing power, right? That have this ability to absorb or pass on inflationary pressures, right? Companies that can say, well, I'm going to just charge you more for this product. Great. That's a company you want to own. And so in inflationary times, you're going to want an allocation to those kinds of things. And with money supply expanding again, well, all bets are off. And here we go again on a big breakout here. And we don't know where this is going to end. That is potentially very, very positive for Bitcoin. So let's talk about MicroStrategy itself. Here's MicroStrategy, MSTR, and so again, disregard today's pop here, but we can see that we've had this sort of little bit of a consolidation with Bitcoin. For much of the year, it's sort of been going sideways, and it makes sense that these stocks, Bitcoin miners have done poorly. A lot of things have gone sideways to down, frankly, if we look at things like Mara and CLSK, just haven't done very well at all. MSTR has bucked the trend to some extent. It's outperformed really some of the other areas of Bitcoin proxies, as I like to call them. So MSTR is really kind of a software cloud services type company, but they've made a name for themselves. Michael Saylor has been a big fan of Bitcoin and keeps buying more and more and more, and they own a ton of Bitcoin. So it's become known as this sort of very sort of tangible proxy for owning Bitcoin without owning Bitcoin. And so it will ebb and flow with the fortunes of Bitcoin itself. And so we saw that it was kind of bouncing around, came down to this line here not long ago, which established this trend line. And it did start to break out too many days ago, came back and retested, and yesterday sort of finished right around that 130 level. almost in that breakout territory, very much in that breakout territory under this 50-day. So what I like about it is today, we can talk about today because it's happening, we're now above that 50-day. So some of the things that I was thinking about are now happening very, very quickly. Sometimes you don't get lucky like this. You don't get things going in your favor immediately, but suddenly we're in a world where 50 basis points means probably another 50, 75, and ultimately futures are looking to another 200 minimum basis points of rate cuts. I think that's a lot overdone, but as it is right now, we're looking at more more of a easy money type environment, and that's again good for stocks, and it should be good for Bitcoin as well. So that's kind of our fundamentals and backdrop that go into what is our thesis for this trade. And so let's move on to MSTR implied volatility. So as I mentioned earlier, you don't want implied volatility to be too high when you're going long options, right? You're going long options, you're going long gamma, you're going long, basically you're spending money, right? You're going to have you don't necessarily spend money, but you're going to have basically what is an exposure to long vega in this particular trade. So you don't want to buy volatility that's too high. And so you can see here that we're basically trading kind of in the low, around 20% rank of where volatility has been over the past 52 weeks. And you can see down here, this ranking indicator showed just under 20, which is good. You don't want to buy something that's sort of 50, 60, 70, definitely not in the upper end of where volatility is, especially if you're putting yourself out in slightly longer term options, which we're not going clear. We're going November, it's only a 2-month option, but we have to always be cognizant of that vega exposure. And even today, we've had a little bit of a compression in volatility, which hurts a little bit. Overall, the trade is doing fantastic, but we know that the volatility is already quite low. So we definitely want that working for us. Now let's also take a look at skew. So this is a cool site called Market Chameleon, and you can get some free features on here. This is one of them. You can see the skew on any stock. So I've got MSTR in here. We can see that, and this is of course a deeper conversation. I've got another video on skew that you could take a look at. But right here you have the at the money implied volatility. This would be the 25 delta, so the out of the money put, 25 delta out of the money put, and this would be the 25 delta out of the money call. Now, this is today's in the green. Yesterday's was actually slightly inverted, meaning the out of the money calls were a little bit cheaper than the out of the money puts at the 25 delta. That's what I would call sort of flat skew, without getting into the really, really small priced options out here, the very, very low deltas. We can sort of look at 25 versus 25 as a kind of good view of skew. And we can see that typically what you get is a negative skew. So puts generally are cheaper than the calls, and that's simply because Bitcoin is a little bit more like gold, like a safe haven of sorts, and people kind of flock to it when things aren't going as well. Of course, with Bitcoin acts the way it acts. Sometimes it's risk on, sometimes it's risk off. So there may not be a lot of truth to that in the end, but it definitely has this kind of structure, generally speaking. Well, as of late, we've had it actually go the other way. So the calls are actually slightly cheaper than the puts. And that is an important thing. When you're doing a back spread, you want to be selling something that is kind of a little bit closer to the money, and you're buying two calls that are further out of the money. You can do this on the put side as well, but in this case, it's this upside back spread. So nice to know that you're actually paying less from an implied volatility level than the call that you're selling. And so that's kind of one of these nice favorable things. Now, do we want it even more negative? Of course. And you're going to get something like that in something like SPY, where the way out of the money calls are going to be very, very cheap compared to the at the money and certainly the out of the money puts. So skew quite favorable here. So we've talked about implied volatility, relatively low. We've talked about skew, very favorable. In fact, very, very flat, and in fact, even inverted. So we're paying less implied vol than the one we're selling, than on those we're selling. And compared to where it normally is, on a 52-week basis, it's actually quite favorable for this product. So we don't want to just, skew isn't the same for every kind of product. You want to look at skew for a particular name, right? Skew on Apple, skew on Microsoft. You can look different from skew on J&J. So we want to look at skew for that particular product. And for this particular stock, it's actually very favorable compared to how it normally is, which is steeper to the upside. So let's move on and look at the actual trade. Okay, so the way this trade works is you're going to sell something a little bit closer to the money. Some people have rules like you're going to sell a 40 delta, you're going to buy a 20 delta. You can sort of play around with pricing just to kind of make it make sense for you. But you're going to sell with the stock at 133. We sold one of the 141 calls at 24 at I think it was around 16 and a quarter, and we bought two of the 166s, and it came out to a $3 debit. So we had to pay $3 for this particular trade, right? And what that means is when you pay $3 for it, the nice part of this ratio spread, it's also called a ratio spread, is on the downside, you're limited to whatever you put in. So if MicroStrategy went to $40, the most I'm ever going to lose on that trade is $300. I will never, ever lose more than that because I'm only limited to the net debit that I've paid for this. Right? This call is going to go to zero, and I've paid extra $300 worth of these 166 calls, and so down to zero, I can only ever lose the $300. Now, the nice part is if a stock makes a relatively swift move, and we can see with this magenta line here, is that you start to get those outer calls start to kick in. So the 166s start to kick in and give you a little bit of that leverage, right, that you get with options. So when you're long an option, you get leverage. You can turn something that you paid $10 for into $20, $30, $40, $50. You don't get that leverage in your favor when you're selling options, for example, which I'm a huge fan of. It's something that we definitely do in the programs. It's really the focus of what we do. But every now and then we like to pepper in some sort of long strategies that really make sense. Only when they make sense, right? These are tricky. It can be as simple as a call spread, a put spread, but when you're putting on long strategies, long option strategies, you need to be very, very cognizant of a few things. And we definitely teach all those things in our program. So what has happened here? Well, we've had this huge move up to 148 today. Take a look at where we are. We're 146.96, and we've come up to this point here. So now we're moving up. We can see that vol compressed a little bit. I'm a little bit surprised because if Bitcoin is in favor again and MSTR becomes in favor, we could actually see a lifting of volatility, similar to what the gold complex does. The upside tends to be more expensive. And just like an MSTR, which is one of the nice reasons that we had that inverted skew to take advantage of. But typically if Bitcoin gets to that point where it's really starting to be in favor again and starting to move strongly to the upside, you're probably going to see that upside skew really, really blow out as everybody starts picking up those out of the money calls. So that's one of the bonuses with this kind of strategy on a name like this is if we start to really accelerate to the upside, we may actually see implied volatility explode higher, which would be great because we do have some Vega exposure, as you can see here. Okay, and the whole structure, we paid $3 for it. Let's see what it's worth today. Well, the ones that were long are worth $14.60. We've got two of those. That equals $29.20. And the one that we're short is now worth $24. That one's moving against us. But together, as a package, it is worth $5.20, a $5.20 debit. If you were to sell this out right now, you get $5.20 for it. We only paid $3 for it, so we've made $2.20, which on a $3 move profit is about a $73 profit in one day. So the nice thing is this could get better. Now it could get worse. We could give them back if it turns around. And so it's up to us to sort of decide, do we want to keep this on? This is where the decisions part of it comes into play. Do we keep this position on? Well, I didn't put this on for a one-day trade. I feel that money supply is expanding. I feel that it's risk on again out there thanks to what the Fed has done. I think there's a very big lack of respect for fiat currency. the government is just going to continue to spend money, cut taxes, et cetera, et cetera. This is a world that is probably going to be awash in money, money, money. And a lot of that is going to benefit things like Bitcoin, which has been a little bit ignored, and some of the miners and some of the proxies like MSTR have also been a little bit ignored, although less so on MSTR. So I think it's a great time to perhaps hold on to this trade. We're going to sort of see how it plays out. We of course don't want to give back anything that we made, but anything can happen. So I hope that was informative for you guys. Really kind of the way I go about thinking of a strategy like this, all the different components that you can put into developing something like this. And so when the time is just perfect in certain situations, you can get in here when the implied volatility is low, when the skew is relatively flat, and you see the potential for a big explosive move. Nice way to put something like that on, because you only risk a small amount if it goes the complete opposite way. Now, important to know that there is this, as you get closer to expiry, you're going to get this potential sort of sea of death that we call it. If it's over time, this is going to start to wane in its ability to make you money as this magenta line starts to move closer and closer to the teal line. So this is a strategy that you don't want on for too long. If it's a 2-month trade, you really don't want this to go for more than a couple of weeks, a week to 2 weeks. So you need that explosive move fairly quickly. And if you have to get out, you have to get out, and you can take another look at the stock. Now the stock's starting to look really good, and if I need to close this, I may reopen a different strategy that starts to benefit from that upside again. So I'm not saying that I'm going to get out of being long or interested in this area, the Bitcoin area, but this is a position that you can't let stew for too long. You got to kind of take your money and run once you get a little bit of a decent move. So we'll be looking to close this fairly soon. Anyway, this is some of the strategies that we look into in the program. We have a lot of different cool things that you can learn. And if you want to know about any of those, just look down in the description below. Again, great place, great community. We have amazing traders in our community, and you only get in. It's exclusive to people who do the programs, and the programs are unbelievable. The reviews are incredible. If you go to any of the links that I've posted, you'll see the incredible reviews for my services and my courses and my approach to doing things, which is a little bit different from your typical option seller. So we'll see you guys next time. I hope you enjoyed that, and we'll do it again soon. Bye-bye.